Now, once again, Mr. Sagar Nandi will be joining us today. He has actually been a full-time trader for quite a few years now. Sagar has had the ability, and luckily enough for us, he's really put together not just a trading system, but a trading community around his philosophy. And it's something that I think that everyone should go visit his community. It's superiorprofit.co. He has free training. He has ebooks, videos, tutorials, a ton of free market information. I believe he does a weekly market roundup as well. Just a wealth of information on this site. And in general, working with Sagar over the last few years has been, definitely a pleasure of mine. Primarily due to the fact that it's not just about a system with him, it's about educating individuals on the process of their trades and making them better traders consistently. I don't want to take up too much of his time, so I'm going to go ahead and turn the time over to Mr. Nandi and let him get into his lesson for today. Sagar, are you there?
Let me begin. Thanks to Hunter and Metastock for organizing this webinar, and thanks to all of you for joining me today for today's presentation on managing risk and reward and looking at a framework for calculating expected annual return. I am Sagar Nandi, Chief Analyst and Trader at Superior Profit, a company based in Singapore. I will not take time to introduce myself. This 1 hour I like to use for trading discussion. If you are interested to know more about me, the company Superior Profit, or more importantly how it can help you in your trading, you may visit the website www.superiorprofit.co and click on the About menu. Before we begin, let's go through the standard disclaimer. This demonstration is for educational purposes only. It is designed to share information on Superior Profit's trading system. The information presented here should only be used by people who are aware of the risk inherent in trading. Past performance is no guarantee of future return. Superior Profit is not an investment advisor. This session is not for any recommendation of buying or selling stock or any other instrument. Superior Profit will have no liability for any investment decision made by its audience. In today's session, I will explain the importance of having a realistic expectation from the market. I will share a simple framework that you may use for objective assessment of that expected return. This framework takes into account two types of factors: empirical factors derived from using Q systems and your personal profile factors. Two of the factors, success rate and reward risk ratio, are based on actual empirical data from Q trades, that is trades taken using Q trading systems and its 360 degrees analysis. We'll go through actual trades from the traders community without picking and choosing to calculate those two factors. In addition, you will need to enter your personal profile factors about risk appetite and number of trades you will take in a month, which depends on your lifestyle. Combining the empirical factors and your personal factors, you can easily and objectively arrive at a realistic value of expected annual percentage return. We'll then summarize the discussion and have a Q&A session. If there is some time, I will be happy to look at the live market using the Q tools and look for trading opportunities. I will focus today's discussion on swing trading stocks only. I will not discussion about other instruments, futures, options, etc., or other styles of trading like day trading or long-term investing. Though you may take all these types of trades using queue systems, and though there are such trades in our traders community as well. Why you need to have an expectation? Every successful trader treats it as a business. They learn about it. They have a systematic approach. The foundation of their systematic approach is based on a set of robust tools. Regarding tools for trading, queue systems provide a single-stop shop for all the tools you need for 360 degrees analysis before you place a trade. All these tools rely on the data and the charting platform, that is Metastock Zenith and Metastock charting platform. We use Q Global for technical analysis, Q Vital for fundamental analysis, Q Edge for industry sector analysis. During the review of the actual trades, I will illustrate some of the uses of these tools. After adopting a robust set of tools, successful traders set a realistic expectation against which they can measure their success and review what they are doing right and what they need to improve based on a trading log. If you do not have a realistic expected return and you are not measuring against it, then probably you are not running trading as a business. Also, you are probably avoiding confronting the reality of your trading account's growth or lack of growth or loss. Superior profit traders know better, and they establish a realistic expectation based on objective calculation. If the expectation is unrealistically low, you will leave money on the table and unfortunately still be happy with it. If it is unrealistically high or not achievable, you will be frustrated and your emotions will take over. You would not do that in a business, and superior profit traders do not do that in trading. It also has to be objective. An objective expectation must be calculated based on empirical data and not based on arbitrary input. Just as in a business, you may look at past performance to set future goal, so may you do in trading. For this, I will walk through the actual trades without picking and choosing that were shared in traders community to have a benchmark on success rate and reward risk ratio. The expected outcome is also to be personal. If you run a coffee shop that is open only for half a day, then you may adjust the empirical data from other shops to compensate for the reduced business hours. You will do similar personalization in trading by taking into account your risk profile, that is, how much money you are going to risk in a trade, and the number of trades you will take in a week or in a month, that is depending on your lifestyle. Next, I will assess the success rate and reward risk ratio from the actual trades from Q traders community. Q traders tend to achieve a higher success rate because they combine edges from sector industry analysis, fundamental analysis, as well as technical analysis with their trades. I have seen that traders who start using this 360 degrees approach and take only the truly highest probability trades improves their success rate by between 10 to 20%. You will probably understand why when I walk you through some of these trades. At the outset, I need to say that Q systems traders don't take a trade unless the expected reward, that is the distance from entry price and target, is at least equal to or more than expected risk, that is the distance between entry price and stop loss. And these levels are decided based on support resistance and volatility characteristics of the stock, not based on arbitrary numbers. This means that if you are using Q systems, your reward risk ratio is greater than 1 over a number of trades. This point will also be illustrated when I walk you through the trades. Let me do that now. For the trades, I will go to our traders community. I have created a shortcut for the latest trades. So this sorts all the posts in traders community in the trade ideas forum based on the time when they were submitted. I will only go through the swing trades, and I will also avoid looking at option trades or futures trades. So let's go through them. I will try to cover 10 or 15, as many as I can. And along the way, I will explain the 360 degrees analysis and also the use of the Q charts, Q edge, etc. in isolation. Let's look at the first trade, Nordic American tanker. In our community, when I share a trade idea, I always like to post the chart based on which I identified the trade. This was a chart of NAT or Nordic American tanker. It is actually a snapshot from our weekly market roundup that was conducted on 2nd September 2017. Because it is a cut and paste from the YouTube video that was conducted at that time, I will not look at that chart, but let me explain how the trade was identified using the follow-up chart. You may watch the YouTube video from our YouTube channel after this session. Maybe you want to fall asleep. Okay, coming back to NAT, it was identified on this candle, the second green candle, after the price fell down heavily. At that time, I observed that after price coming down heavily and showing exhaustion, that is oversold condition indicated by the series of red and magenta dots, there was a bull release signal, meaning at least temporarily the bears were taking rest. The candle color was still neutral, that is yellow. Price then tried to go down but went back up with a second bull release signal. So it was showing that the bulls were gradually taking control. At the same time, this very smart automatically drawn trend line, we call memory line, came below the price, showing that price was being supported at that point. So when the second bull release signal, this second up arrow came, we saw that we already had a higher low. And in the next candle, that is the second green candle with a thumbs up signal, we had higher high and higher low. That is the technical definition of uptrend. And after price dropped heavily, this was actually the first higher high, higher low that were formed. The trade was discussed in the weekly market roundup based on this candle. As in superior profit guideline, we like to take the trade on signal day. Using Metastock Sonar, we could identify the trade, that is Metastock's Explorer. If we enter the trade at the close of this day, then our stop loss will be just below recent low, that is just below this memory support line. And our swing trade profit target will be the next resistance level, which is either the declining yellow direction line or the upper boundary line, that is the pair of gray lines. In 2 to 3 days time, the profit target was hit and the trade was closed. That is a technical view of how the stock was analyzed at the entry time and how the stop loss and the profit target was set. As I mentioned, we just don't look at technical charts like other traders. We like to look at the fundamental as well as industry strength. In fact, this trade was identified by another Q trader who asked me to look at it in the weekly market roundup, and I did so. I remember he mentioned he found it using drill down from Q edge. Q edge is our tool where we can see which industry is strengthening and which one is weakening. At that time, he had mentioned that NAT's industry was strengthening and asked me to look at it. I also looked at the stock's fundamental at that time using our fundamental analyst tool, QVital. QVital can be used in many ways. One way to use it is to do a peer comparison. In this case, I did a peer comparison of the stock NAT with a list of other stocks. And the list of other stocks can be brought automatically by the tool. All I need to do right now is look at NAT and look for one of two possibilities. Either the stock has to have high growth. We can look at the EPS growth and revenue growth columns, and I look for green color. If it has high growth, then I know this stock is strong fundamentally. The other way, I can look at the valuation columns, relative value and internal value, and look for blue color. So what we are doing is fundamentally either we are going to buy a stock which is having optimal valuation or having strong growth. Both are definitions of fundamentally strong stocks. Usually they don't happen together, but there are some circumstances when a stock will have strong growth as well as optimal valuation. In this case, I observed that NAT had very high relative valuation score. That is 93 out of possible 100 maximum score. So it was very strong in terms of valuation. In terms of growth, I can look at the score or I can just look at the color. If it is green, I know it is strong. And this valuation, in this growth scores are comparing the stocks across this peer list. So in this case, NAT had good valuation as well as good growth. So we identified this trade starting from Q edge, drilling down, finding NAT as one of the stocks, looking at its fundamentals, which was strong. Finally, we had looked at the chart and saw that there was an optimal buy signal. Actually, this candle color was cyan. That is the optimal buy signal for go with flow. That is our trend following long trade. In this case, it was identified using top-down approach, but it could also be identified using bottom-up approach, that is by running Metastock Explorer first. So this trade exited with profit. For the next trades, let me try to speed it up a little bit. In fact, in the same session, of 2nd September 2017, this American trader, good friend of mine, though I have never met him, very smart trader as well, he asked me to look at CF. And again, this is a snapshot from the recording of that session. For clarity, let me look at the follow-up chart. We had discussed CF on this day, and again, this was a cyan candle. As I mentioned, cyan candles indicate that it is not only bullish, but it has an optimal buy point for swing long in trend following market. What is optimal? When a stock is going up with higher high and higher low, we wait for the stock to dip and then just tilt up. Cyan candle represents the lowest possible price we can catch without buying it at the bottom when it is still falling. So this trade was also identified by this trader using Q edge top-down analysis, but by looking at the cyan color, I know that it could be identified also using Q sonar, that is Metastock Explorer. In this case, the price was going up not only from the magenta and cyan direction lines, those are the mandatory requirements for a trend following trade, but it was also going up from the white and the yellow direction lines. That is the slow and very slow direction lines. This doesn't happen often, and just by looking at the chart during my weekly market roundup, within 10 seconds, I told the trader that this chart looks appealing. The stop loss would be just below recent low, which was strongly supported by multiple memory trend lines, these green trend lines. It was preceded by multiple bull release signals, these up arrows. And while the cyan candle was formed, I saw this dotted line also tilted up. This is the relative performance line that calculates whether the stock is outperforming the market, which was true in this case. So the trade was entered. The target would be the upper boundary line, which was hit in 1, 2, 3, 4 to 5 days. So this trade was also closed with profit. As usual, we looked at the stock's fundamentals as well. All we need to do is type CF, get its peer stocks, and calculate the vital statistics. Again, I saw for CF as well, just by looking at the color coding. It had optimal valuation and growth was not good. That is expected. Mostly we cannot have optimal valuation and high growth at same time. I look for either of them, either optimal valuation or good growth. In this case, the valuation was optimal. On top of that, if you look at the short squeeze score and the short interest score, both were very high. Meaning, if the stock started to go up, short covering could further fuel the rally. That is not all. You could also check the dividend yield score. Again, just looking at the color coding told me that across this long list of stocks, CF had one of the best dividends, which was actually 3.71%, the exact percentage you can get from the fundamental info tab. So here we had a stock which has optimal valuation, potential short squeeze, reasonable dividend, not very high, but reasonable dividend in current interest rate conditions, and the technical chart was perfect at a swing low supported by multiple memory support line. So we took the trade and this ended also in profit. So you are probably starting to see how we are able to combine industry strength, fundamental strength, as well as technical strength when we take the trade. The next post is about Forex futures. I will skip that. The next one is about ETF, Dow Jones Industrial Average, short but day trade. I'll skip that as well. It closed with profit. Next trade is a go with flow, that is trend following short setup. This is swing trade. Let me look at that. This was my trade idea. It was also discussed in the 2nd September weekly market roundup. You can watch the video. This is the stock WTW, that is Weight Watchers, a well-known stock. I looked up the stock's fundamentals, and instantly looking at the valuation, I saw that relative valuation was medium, but internal score was weak. And growth was weak as well. I just needed to look at the color coding. So I had a stock, fundamentally it was poor, both in terms of valuation and both in terms of growth. Now I wanted to look at the industry. Weight Watchers belong to personal services industry. And this is a snapshot from Q Edge. Let me explain this. Every time you open Q Edge, it's an Excel based product, but it relies on Metastock Zenith. It brings data of hundreds of industries, calculates their performance across 12 monthly periods, and then more frequently for recent periods of 10 days, 5 days, 2 days, and even 1 day. So every day if you open it, even during market hours, you will be able to see exactly how industries are strengthening or weakening. It assigns a score for all the review periods, one being the best ranking one, and then also assigns a color coding, cyan to rank 1. So now we have a heat map and ranking table. All we need to do, like in case of personal services, see across the periods how the colors are changing. And you can see over longer periods, 12 month, 11 month, 10 month, up to month 4, it was more cyan, meaning this industry was very strong. In fact, this Q Edge analyzes 255 industries. You can see over 12 months its ranking was 10, so it was very strong. And then see, when I posted it, over 10 days its rank declined to 239. Over 5 days declined further, 248. That is very weak out of 255 ranks. I didn't actually need to read the ranks. I could just look at the color coding and decide that it was weakening. So I had a stock which was fundamentally weak in an industry which was beginning to weaken. By the way, for swing trading, the primary period that we focus on is the latest 5 days period. So if it is magenta color over the last 5 days period, it is a moving 5-day period window, then we are allowed to take a short trade. Again, magenta color allows a short trade. So I had a fundamentally weak strong in an industry that was weak and weakening. And last thing I needed to check was the stocks chart. And this is the exact snapshot as of that day. We are looking at daily chart using the hop on template, the template that we use to decide whether to enter a trade. And on the left hand side, I am looking at the same stock WTW with backdrop template. We align more forces with our trade by looking at the weekly candle color along with the daily pattern. What we had in daily chart is that a stock that was going up strongly. But remember, we cannot make money by placing a trade on past dates. We had to make a decision on the right edge. And we actually have an ambiguous checklist that helps with some practice, maybe 5 days of practice. identify the potential trade on technical charts within 30 seconds. I do it within 10 seconds. Maybe some of you will be able to do it faster, but let's say between 10 seconds to 30 seconds. All I needed to do is look at the right edge. I saw that the stock was starting to drop. We already had lower high because the downtrend line, this red memory line, resistance memory, was formed. So I immediately know that it had lower high. It also had lower low because I saw that the support memory lines, two of them actually, were broken by the last candle. Here I see the traffic light color, red means bearish, was green earlier, yellow, and now turning red. I saw the relative performance tilting down, meaning Weight Watchers was underperforming the market. So if I took a short, my stop loss would be just above the memory resistance, and my target will be at the lower boundary. Again, like the last two trades, in this trade also you can see the reward risk ratio was more than 1, or at least 1. How did the trade work out? I had posted the trade on this day. In 3 days it hit the lower boundary and profit was booked. This traders community and the forum from where I am looking at the trades, Trade Ideas Forum, is open to public. I will not have time to go through all the trades. I was planning to go through last 2 months of trades so that we have a reasonable base on which we can assess success rate and reward risk ratio. Let me try to go through some more. I don't think I will be able to cover all the trades over last 2 months. This post was in the quiz playground. It is a playground open to public. You can try to hone your trading skill. I will not look at that. This was also in quiz playground on 2 Singapore based stocks. This was a stock in Singapore. Let me look at it. It was swing trade, but I will explain certain concepts. This was posted on August 23rd on Comfort Delgro. This is a taxi operator, transportation company based in Singapore. When I first shared the thought, I noted that after a large downfall in the daily chart, there was a bullish headwind signal. This is a possible reversal signal which allowed us to take a possible reversal swing trade, but that was then. At the right edge, I saw that price went up heavily with extreme high activity. It broke the memory resistance line. It had a bull release signal, and in weekly chart we had the reversal sign again, and the candle colors in both weekly and daily were bullish. However, I saw that it gapped up heavily. In superior profit we don't chase stocks, so what I mentioned that time, and as is superior profit norm, we wait for the stock to come down little bit and go up, thereby giving us a low risk trade. See, if somebody entered the trade here chasing the stock, the logical stop loss point will be very far. That is not our kind of trade. But we don't mind keeping an eye on the stock. So I had shared the chart as of that day. After a few days, I followed it up. This was an intraday chart. And on the intraday basis, I noticed that CMDG came down and then gave me a cyan color candle. Remember, cyan color candle is the optimal entry point. So I had mentioned that by end of day, if the candle remains like this, then we have a confirmed go with flow, that is trend following long trade with higher high, higher low, traffic light green, flow candle color cyan, and these three dots also green. We can trade based on the color codes. We don't have to look at anything else. We actually don't need any parameter to set up, any threshold to compare with. We don't even use label on these indicators. Weekly was cyan. So that was my post on an intraday basis. But we don't take the trade unless the signal is confirmed just before market close. So on this day, you can see that the candles didn't close near the high. That is one of the required conditions for entering a go with flow trend following swing trade. Again, the unambiguous checklist is available on our website, but you see both of these candles, though color was green, shape was bearish. How we know shape was bearish? Either it has a solid body, which means price opened higher, closed lower, so it was bearish shape, or a candle with upper tail. Upper tail means bulls tried to push price up but failed, bears took over and could push price down. So both of these candles shapes were bearish. So we were not taking any long trade. If you follow the trades in our community, you will see it's not only about making profit, but also a very good example of how a disciplined trader can track and trade the market. So in this case of Comfort Delgro, we tracked the stock, but as the signal didn't confirm, we didn't take the trade. This was another Singapore company, and in this case, we could actually take the trade. We have multiple chart templates. Here we are looking at this company SIIC. Wait a minute, please. I put a reminder to myself so that I don't get carried away and keep on looking at the stocks and then run out of time. I have a tendency to do that. That was the reason of my alarm to myself. Okay, coming back to SIIC, this was a company based in Singapore. Remember, we have to make decisions at the right edge of the chart, and we have an unambiguous checklist, trading system, fundamental analyst, and industry analyst that allows us to make decisions quickly and unambiguously at the right edge. So we see that SIIC was going down, but at the right edge, I saw it had very high activity. If you see the last bar, very high activity indicated by the dot. We don't need to look at any number. The candle color turned green. It was at multiple yellow support level. These are quarterly pivot levels. And here we are looking at this company SIIC using our decision template, which draws longer term, yearly and quarterly pivot levels. So I found a stock which was at long-term support, fell down heavily, but at least at the right edge went up with very high activity. So somebody, and probably bigger players, must be buying, because smaller players don't buy when the stock is at a very low level. That was one technical finding. Then I looked at the chart using our usual layout, that is the weekly backdrop chart on the left hand side, daily hop on chart. In the weekly, I saw that there was a very bullish shape candle with lower tail, hollow body, closing right on the top with a bull release up arrow. In the daily hop on chart, I saw that price went up and candle color turned cyan. So if I took a trade, my stop loss will be just below recent low. I could book profit either at this declining yellow line, which was also the level of the memory resistance, red line, or I could even book profit once the risk distance was covered. That is the distance between the close of the last candle and low of the swing. That was my technical finding. And after that, within couple of days, price hit my profit target. That is the memory resistance line. In superior profit way, once we take a trade, we follow our plan. We have decided our entry price, stop loss price, and target price. And if the target is hit for swing trading, we for sure book profit. At least partial, maybe half, maybe 3/4. There are more detail on how much one could exit, but for sure we exit the trade with profit. So this trade also closed with profit. Now every trade doesn't close with profit, and you may go through the trades in the community, but I remembered the alarm to myself, so I will not go through the rest of the trades for last 2 months. But let me show you the summary data from these trades. I have collated the result from past 2 months trades, no pick and choose. And this is the final data. There were exactly 20 trades shared in the community. We went through NAT, Nordic American Tanker, CF, WTW, SIIC. Remember CMDG, Comfort Delgro, was not taken, so that is not in the count. You can see few trades also made loss. BBY made loss. It was a swing short trade that was identified. And when telecom was starting to go up from the very bottom, we had identified Verizon and CenturyLink. CenturyLink actually exited with loss, stop loss. Verizon made profit. And then Cheesecake Factory made a loss. So out of 20, 16 made profit, 4 made loss, or we had a success rate of 80%. This is not uncommon. If you are able to align technical edges, fundamental edges, as well as industry strength with your trade or weakness for short trades, 80% success rate is not uncommon. It does, however, require some patience. And if you do it right, you are sometimes able to catch the very bottom or turning point of a stock or industry or a commodity, maybe of gold or silver. In fact, let me just go to this post on Verizon. I want to illustrate one point. In the community, we have a feature that I can search for stocks. This was the post. The name didn't have Verizon in it, but you will see how beautifully you could use Q Edge. That was on July 22nd. No, okay, before that, July 20th. Now see how I was tracking and how easily you could do the same. When I opened Q Edge every day, and remember it was then, everything was magenta on the right hand side from month 11 to 2 days. Magenta means integrated telecom, telecom service, wireless telecom, all the telecom related industries were very weak for long time. And then I saw on 1 day interval, that is on exact that day, all turned cyan suddenly from 155 to 6, 156 to 11, 161 to 20. But you just need to look at the color. I just look at the color. So I thought that this may be the turning point for long-term investment as well as swing trading. However, for swing trading, I mentioned that our primary interval to look for cyan color long trade is 5 days. That was not cyan yet. So I posted it and mentioned that we may keep an eye. After a few days, again I posted, and by then you can see the 5-day period has turned cyan, and you can see even 2-day, 1-day period at that time were holding strong, remaining cyan. So we had an industry now which was weak for a long time and now starting to gain strength, that is outperforming all other industries. You know, rank 4 out of 255 is pretty strong after showing such weakness, magenta color, all along for many months. So I was able to drill down from there using keyword. You can drill down, and then I found Verizon. I am looking at Verizon using the usual at a glance. I say at a glance in our community because we can look at it within 10 seconds to 30 seconds. We should be able to know there is a trade or not. In the weekly chart, I had price coming down to memory support line and tilting up. We also had this headwind, possible reversal signal. In the daily chart, a similar reversal signal had come here, which gave us a profitable reversal swing trade, but that was then. We also had a reversal bearish signal here, the red diamond instead of cyan diamond. That also gave us a profitable swing short trade, but that was then. At the right edge, I saw bullish signal in weekly, bullish color candle in weekly. In daily, I had a cyan color candle. Traffic light was green. These movement indicators were all green. Also, we had this thumbs up. This thumbs up I showed you in another chart also. The thumbs up shows that the price is at very low level, very low, so that you could take even a very long-term investment. In long-term investment, my preference is to take this kind of stocks in industries which were weak for a long time, now turning into strength, and in stocks that are fundamentally strong. So in this case, the charts looked very good. Low risk. My stop loss should be just below this swing low. Target will be for swing trading the yellow declining line, the upper boundary, or the memory resistance line. I had looked at CenturyLink also. Now if you see CenturyLink CTL, it was not as good as Verizon because the weekly candle color was still magenta, that is bearish. So if we kept them side by side, we have to say that Verizon is the right trade to take. And if you apply our unambiguous checklist, it will actually not allow us to take the trade. And you will see that checklist, that indicators, the templates are made in such a way so that it keeps us out of harm's way. Only the highest probability trades are taken. So this was not perfect signal in any case. After some days, remember Verizon, we identified it at this time. We might have booked partial profit on this day, but it gapped up. And surely we would book at least partial profit here. And we have a way to let profit run using trailing stop. We have a separate template for that. On the other hand, CenturyLink came down. Stop would have been just below recent low. Stop was hit on this day. But if you are a disciplined Q trader, you will apply the unambiguous checklist and probably wouldn't take the trade. But because it was posted, I didn't want to discard it. I included CenturyLink in the loss-making trade list. We still had 80% success rate, and reward risk ratio was 1 or higher. So we looked at the empirical data based on 360 degrees Q analysis, the trades that we took over last 2 months, shared the trades at the time they were identified, followed up with result. That was very good result, 80% success rate. Now with that, you need to add your personal risk profile. Successful traders manage risk and they risk only small portion of their account in each trade. Why so? The outcome of a particular trade is always uncertain. However, using this 360 degrees analysis, as we saw, you can take truly high probability trades and achieve a high success rate, maybe 80%, maybe 70% if you are starting, but certainly very high. Now this high probability of success needs a number of trades to play out. If you risk all your money in one trade and each trade's outcome is uncertain, that trade goes into loss, you lose all your money. So it is important for that reason to risk only a small part of your total capital in each trade and let the higher probability trading system and approach play out in your favor. How much money do you then risk in each trade? For swing trading stocks. To answer that, let me classify traders based on their risk taking. If somebody is taking 1 to 2% risk of their total account size, then I will classify that trader as low risk trader. 2 to 5% moderate, 5 to 10% risk in each trade will be considered high, and probably more than 10% will be considered reckless. All the traders I know who are profiting consistently, and the keyword here is consistently, not about making money in one trade, but consistently over months and years, they all belong to this low risk category. And I hope you will do the same when you are using these Q systems and 360 degrees approach. That requires discipline, and we have actually put together the traders community for that purpose also. It is open to public. Being part of this community and attending the live market roundups that we conduct every week, or watching them on YouTube if it is at an inconvenient time for you, reinforces this discipline in risk management. You need to look also at the other factor, personal factor, based on your lifestyle, that is frequency of trading. How many trades are you going to take in a month? Remember the statistics from the last 2 months trades in the community. 20 trades were taken in 2 months, or 10 trades per month on average. The actual Q trade setups available to you in a month is of course much more. America has thousands of liquid stocks, and using Q systems you can take even more trades if you want, because it allows you to trade globally. And there are examples of trades in the community on Hong Kong market, on Singapore market, on India market, on Australia market, and you can take in virtually any country in the world. So you need to decide for yourself what is your average number of trades in a week or month. All the Q swing stock traders I know, and most of them have a full-time job, comfortably identify and trade about 2 trades per week, very comfortably, or about 10 trades per month, or 100 trades a year. Q Systems Sonar search program based on MetaStocks Explorer that can go through hundreds of stocks in short time and look for potential trade setups. It's purely visual tools, not only for technical charts that we saw, but also for fundamental analysis and industry analysis means that you can complete this 360 degrees analysis in relatively short time. And you may use top-down approach as well as bottom-up approach. There are other videos in our YouTube channel to explain these different approaches. But now let us put together these factors together to arrive at a realistic expected percentage return. We saw it is not difficult for swing traders to take 100 trades per year. We saw from the trades shared over 2 months period, and you could go back and look for years of data. The traders community actually began few years ago, so all the trades are there. In last 2 months, when we started using Q Vital, Q Edge and Q Global together, the success rate was 80%. If you risk 2% in each trade and have a reward risk ratio of 1, which was true in all the trades I showed you, then the yearly percentage return will be 80 trades profitable, 2%, so 160, 20 trades losing, 2% minus 40, net profit would be 120%. If you had a success rate of 70% instead of 80%, your net profit will be 80% at the end of the year. And if success rate goes down to 60%, even then you should have 40% success rate. If you take 4 trades a week instead of 2 trades, that is 200 trades a week, 200 trades a year instead of 100 trades, then these numbers will be double. So this gives you a framework, objective framework, based on which you can decide your expected annual percentage return. And these are based on actual numbers and your own trading profile, not on arbitrary criteria. In summary, calculation based on actual trade data shows that it is not difficult to make significant annual profit from swing trading stocks if you are taking trading as a business and put things in place. Few things you need to put in place before you begin this venture. Use a robust set of tools that does not take forever to identify and take trades. Q tools, as you saw, provides the means to do 360-degree analysis in short time. You also need to spend some time regularly, maybe 30 to 60 minutes in a day, at least 2 to 3 days in a week, to identify new trades. And when you are not taking new trades, just need to spend about 10 minutes to review the open trades so that you can exit them in a timely manner when the profit target is hit or the stop loss is hit. Or you might also use GTC orders if your brokerage allows that. You also need to manage risk. Like I showed you, risk only small amount. 1% of total account in a trade, maybe 2%, but may not go to higher risk trades. Let the technical, fundamental, industry edges work out in your favor over a number of trades and maintain discipline along the way. That is all I plan to share. Let me look at the live market and see if I can identify some trade from there. Let me use top-down analysis. This is Q Edge. Every time I open, it calculates data about 250 or 255 industries and ranks them and color codes them. I can copy the data into work area and let's sort them over 5 days period. For swing trading, this is the primary area. And instantly, all the strong industries come to the top. Then my job is to look at the color pattern. Instantly, again, coal catches your eye. It was magenta for long time, meaning it was weak, and now it turned cyan quite fast. Over 5-day period, rank of 2, the best possible rank being 1, and I can see that it is holding the rank. Color is remaining cyan over 2 days and 1-day period. So I can just click this button or use the hotkey Ctrl+Shift+S to get some of the stocks into industry stocks page. And I can find BTU, CLD, CNX. My next job will be to look at their fundamentals. So let me pick BTU, go to fundamental analyst. There are multiple tabs, but I will not go through all of them. I can just type the root stock, decide what kind of stock list I want to retrieve. It can be based on industry, sector, country, or even global. And there is a fuzzy logic kind of mechanism where you can look for similar industries. This I use sometimes when, for example, I was looking for gold stocks in Singapore. There are very few. To do the PR comparison more meaningful, instead of choosing industry, I could choose industry plus, or I could choose global. In this case, I don't know how many PRs will be there for BTU, but I can click this button to find out. It's P by energy. In fact, if I go to the input tab, it will give me more information on that. But let me just go back and click on the calculator so that I have the fundamental statistics of all these stocks. Why it is not working? Maybe because of network data. Okay, never mind. But if I had the data, sorry. Yeah, why the data was not retrieved? Because the PR list was actually retrieved, but in manual list, I had input a large number of stocks, so that was overwriting the list of coal stocks. So I removed the manual list. Let me do the fundamental calculation again. It is retrieving the fundamental statistics. I may go to the vital statistics. While it is calculating, let me start looking at few of the stocks, BTU and maybe CLD. If the stock doesn't have enough historical data, a warning will come, no issue. Now I see BTU, that is P by energy, is having higher high, higher lows, but it is already very close to the boundary line. And it is at kind of double top. So I'm not going to take any swing long trade here, technically. My optimal entry point was actually on this cyan candle. As I mentioned, the cyan candles are the optimal long entry point for trend following trade. And if I took the trade, stop would have been just below recent low. Target would have been the upper boundary, which was hit in 1, 2, 3, 4 days. 4 days. At the right edge, because it is already close to upper boundary, I am not going to take any trade, whatever be the fundamental strength of the stock, because I am trying to align everything. Let me look at CLD. This stock looks interesting. Let me look at it through weekly and daily together. By doing that, we can align more and more edges in favor of our trend. In the weekly chart, I can see it dropped a lot. Then it created a low, went up, created a higher low, and at the right edge where we have to make decision, we have a cyan color candle. However, memory resistance line is just on top of it. And in daily, I can see that after this bullish headwind, the possible reversal signal came, it actually gave us a very profitable reversal trade, which allowed us to catch the very bottom. But at the right edge, it is inside a triangle pattern. I have a resistance memory on the top, support memory at the bottom. So I will wait for price to break out of the triangle pattern and then go up and probably till down and go up again, giving me a higher swing low and thereby a very low risk trend following long trend. In the Q edge, if I short it in the reverse order, then instantly I can get all the industries that are weak now. Primary period for swing trading is 5 days period. And you can see cable and satellite. It is magenta now, earlier it was strong. So probably you could look for short trades in cable and satellite. You could look for short trade in professional information services also. You could drill down and do that kind of analysis. This is top-down approach. If you wanted to run bottom-up approach, you could go to Power Console of Metastock, go to Explorer, look for, if you are trend following trader, look for go with flow long or short. If you are reversal trader, you could look for bounce long short, box long short, or headwind long short. Though there are more sonars for reversal trades, more of our trades are actually trend following trades if you look up the community, other than at the turning points, which are also very profitable, and we are able to catch them confidently by using QH. That is all the time I have today. Thank you all for joining. Thanks to Hunter again for arranging for this webinar. I look forward to seeing you in the next webinar as well as in the weekly market roundups. You may register for the roundups on our website under education live session. I'll be happy to answer any question you may have. You may also write to me using the email ID shown here. If there is no question, I will like to pass control back to Hunter.
Thank you so much, Sagar. Wonderful presentation. And for those of you in the audience, obviously here at Metastock, we work with a lot of educators. We have a lot of systems built within Metastock. We're adding more all the time. I had the advantage of having kind of a 10,000 foot square overview of all the systems that we do carry. And it's rare that you're able to find a system that so ties every aspect of your trading together. And that's one of the things that is really, really important to take hold with Sagar's systems here. It's not just a technical approach. It's not just a fundamental approach. It's a mix of both, and being able to educate you on how to apply these very, very consistently in your trading. And I can't stress enough consistency, because if you're able to establish a set of guidelines and a set of rules that you can go in and do the same thing every single day, you're able to realize those profits consistently, like Sagar was outlining when he was talking about potential returns, etc. One of the things that again, if you weren't with us at the first, that I love to bring up is the community that surrounds Superior Profit. If you haven't had a chance to see any of Sagar's other webinars, go to superiorprofit.co. check out some of his educational materials. A lot of this information is available for free on this without having to join up or do any of that. But you know, the community that surrounds Sagar is very powerful, always posting these trade opportunities. And this webinar is kind of unique in the fact that we were able to take a look at a lot of those trade opportunities that were posted in the forums and show you so that you can realize that profit utilizing the system. Now, this is not a system that you're going to understand within the first day of using it or 2 days. It's going to take a little bit of time to be able to connect all the dots and be a all the way around trader, even keel with this system, and be able to realize those returns consistently. So what I want to do and what Sagar wants to do is give you the opportunity to actually use this system and the tools that he showed you today over a long period of time, over a 3-month period of time, to make an educated, to be able to make an educated decision on whether or not it fits within your trading style, so that you can start seeing some of the profits, so that you can really understand the methodology. So what we wanted to do is provide you a 3-month trial of the tools that you've seen today for the price of 1 month of Q Global. Now, Q Global is one of our better selling add-ons out there, and you know, with Metastock, he was able to show you some of the different charting templates and, you know, explorations, etc., that come with this add-on. But if you pay for 1 month of this add-on, which is $99, you'll get 2 additional months at no cost, as well as the other tools that you saw today in the webinar. Now pair that with the education and training that Sagar is involved with through his website, through his community. We're pretty darn confident that it's going to be a system that's going to work very, very well for you. So take advantage of this offer. Go to metastock.com/superior profit 3 for 1. Feel free to shoot Sagar an email at sagar@superiorprofit.co. You can shoot myself an email, hunter.smith@metastock.com, or you can just go straight through this link, which is probably the easiest way to do it for you. Also, as always, guys, let us know if you have any questions. Come into sales chat if you have any questions about what was discussed today. Feel free to email again myself or Sagar. Once again, Sagar, thank you so much for being with us today, and for all of you out in the audience, thanks for attending. And as always, happy trading.